Hello guys, this is the pre-market analysis of 21st of July. So Gift Nifty is indicating a gap down of around 100, 120 points. So we may be getting an opening around 24, 150. Immediate support is at 24, 100 and then 24,000. So basically, since it's expiry, we are looking for a range of 24,000 and 24,300 range. And even if it is in that range, even if there is some small volatility, most of the time, since it's remaining in the range, you may end up with premium decay as an option buyer. So I'll come to that and I'll explain what scenarios you can trade and what scenarios you need to avoid. So basically, you have to look for breakouts and breakdowns today, right? Otherwise, you may get volatility, one or two big candle, but till then, if you enter and hold that trade, you will be psychologically down. And after taking your stop loss, because of the time decay, the premium will move. So I'll show you that scenarios. This is what exactly happening in the previous expiries also, since the market is in this very tight range for quite some time. Okay, the best rates that you'll be getting now, let me tell you frankly, as an option buyer, you'll be getting it below 24,000 if market break, or above 24,500 only. So till then, market is convinced and it's staying in the range. So it will be very difficult to get that momentum, very difficult to get that trade. Some spikes will be there here and there. You may be, you may not be able to capture that. Okay, so coming to the pre-market analysis, let me discuss 5 important things today. HDFC Bank is big negative. It is indicating almost 10%, negativity in ADR. So there is a sharp fall in HDFC Bank ADR. ADR means the same price, the same stock which is traded in the US market, American Depository Receipt. For example, HDFC trade there, Reliance trade there, right? TCS trade there. So what happens if, like, tomatoes traded in Kerala and Tamil Nadu, when you see Tamil Nadu prices correcting sharply, what can happen? Normally, the price correction will come in Kerala also. If price is going up there, automatically there will be equilibrium. But you can buy there, you can sell there. That means you can buy here and sell there also. So if price is coming down, you can buy here and you can sell there. So keep doing that, and then automatically this will come in an equilibrium, and that's why it is very important. So there is a big negative arbitrage, and that impact will be there. Yesterday also, at one point, HDFC single-handedly taken Nifty 100 point down. At one point when Nifty was 200 point down, HDFC alone contributed single-handedly 100 point move in Nifty. And yesterday we discussed about the three results: ICICI, Reliance, and HDFC. HDFC, I told you it's not that good, and it's at 1.4% down in India. Indian market single-handedly took 100 point down. So that is something which we need to discuss. And then US-Iran conflict and the ceasefire proposal, the potential proposal we'll be discussing. Is there a possibility of at least another 10 days proposal? Yesterday there was a news came, and that's why you got that spike towards the afternoon session. Otherwise, it was looking so down, right? And then oil prices again getting volatile. I'll quickly discuss that. And India's core infrastructure growth, if required, I can discuss. And then, this long-term capital gains clarification by the government. So these are the main points that I want to discuss. Now, let's start with HDFC. See, the market have reacted very negatively to the, even though I saw the result and I've explained yesterday, I said it's not big negative, it is mixed. But market reacted very negatively, especially due to this net interest margin, NIM. It has declined by around 12 basis point from 3.38 to 3.26. And this is the lowest NIM since HDFC and HDFC Bank merger. So that market have taken very negatively. And if you see, South African banking group Investec actually downgraded HDFC Bank rating from buy to hold, and the primary reason is the margin pressure. And then the CEO reappointment, right? CEO Jagdishan's reappointment that has not been approved yet. Current term is ending in October. So the delay again have increased the governance concern again among the investors. And if you look at ADR, 10.6% down in a single session. Guys, think about this. HDFC, that's the biggest bank in India, right? Private sector, if you talk about. So if HDFC is collapsing, the entire system will collapse. So that won't happen, of course. But still, when HDFC is falling 10%, you think about HDFC is falling 10% in Indian market, hitting a lower circuit means how much panic it will create in the entire market itself. Right? Yesterday, 5% alone took single-handedly Nifty down by 100 plus points. Right? If HDFC is falling, that means single-handedly it can take 100, 200 points, 200, 300 points down. Right? Even if others are doing well, yesterday it single-handedly did that. So trading volume, if you see, it's around 26.3 million ADRs. So previous Friday, it was around 5.2 million ADRs. That volume is also increasing. So That means there is a meaningful selling, and you can see fresh price discovery also. There is a big arbitrage difference also. So that may affect our market and HDFC pricing today. So overall, HDFC Bank negatives, if you see, firstly, the quarterly results is weak. Secondly, lowest NIM after the merger for the first time, and analysts also downgrading HDFC, and CEO reappointment uncertainty. So these four are actually, but in my case, see, for me, as much as HDFC is coming down, it is good because I'm looking for HDFC for the next 10 years. I'm buying this. I keep buying this. I remember I bought HDFC in 2024 June also at 680 level when it gave a dip and it gave a rally 2000. I didn't book the profit because I'm holding for 10 years. Even now also, I'm getting it around 7. Now it is 780. Last month it came to 730. I bought aggressively. Now again it is coming to 730. If it is coming 730, 740 level, I'll buy aggressively. For me, this is value buying. And I'll hold for my next generation. Okay, so anyway, I'm very confident about HDFC anyway at any point of time, because if HDFC is not there, Indian entire banking system, forget about banking system, entire economy can collapse. Okay, so that is one thing. Now, I don't want to get into the other. Okay, let's quickly discuss the ADR. So if you look at HDFC arbitrage alone, it's around 2.3 to 5% negative arbitrage. So that will have a huge impact on Nifty. And as of now, it's indicating 100-point gap down. ICICI is almost flat. It's compared with the Indian market. A fresh small negativeness weakness is there. Right, IT ADR again both closed negative TCS and Infosys, but arbitrage remain positive. So banking ADRs are weak. IT ADRs are mildly positive. Now let's now move on to the geopolitical scenario. US-Iran update. Military developments, if you see, US carried the 10th consecutive night of strike on Iran, and Iran also launched additional attacks on commercial ships and Bahrain, Kuwait, etc. And then there is a ceasefire proposal. Iran confirmed that receiving a proposal from mediators for a temporary 10-day ceasefire, and that is the reason why yesterday the market have gone up in the afternoon. Right. So the objective is basically to resume the negotiation and possibly revive the earlier interim agreement, which has been halted or called off by Mr. Trump. But Iran has not yet accepted the proposal. So overall sentiment, if you see, fresh diplomatic initiative is happening, but at the same time, military escalation is continuing from both US side as well as from Iran side. And oil price, if you see, Brent crude is above 90 now. And when I'm recording this video, Brent is around 89 and WTI is around 83. US market, we have seen there is an aggressive selling in semiconductor stocks. And yesterday there was a short covering in that because aggressive selling was there for a couple of sessions. So Nasdaq have recovered almost 1% intraday. And then later that gains faded. That recovery was mainly due to semiconductor, short covering. Then market close, Dow Jones is around 0.6, S&P is around 0.2, Nasdaq almost flat, and US VIX, if you see, largely unchanged. It remained the same. So GIFT Nifty as of now indicating 150 level. So if you consider 20 premium for this 7-8 days which is left, then 130 is where it is opening. So it will be around 100, 110 gap down is what we are going to get. Okay, so apart from that, core infrastructure growth. June growth is around 5%. Previous month it was 3.2. That's the strongest growth in 5 months. So overall macro, that is considered positive. Again, government informed the parliament that there is no proposal to remove long-term capital gain tax on equity. So current long-term LTCG, long-term capital gain is around 12.5 and no changes proposed. That clarification is given. Okay. So apart from that, brokerages have upgraded the target price for Reliance and ICICI. So these stocks may continue to support the market even if HDFC is coming down. So overall, if you see the positives, the strong core infrastructure growth, Reliance, ICICI Bank continue receiving the target updates. That's positive. A possible 10-day ceasefire proposal, that's again slightly positive. But negative, sharp fall in HDFC ADR, a big negative, a fresh negative arbitrage is created. And the banking sector is weak. Yesterday at one point, banks were down by almost 900 points and oil remains volatile. GIFT Nifty is indicating 100+ point gap down. If you look at institutional activity, yesterday FIIs again were net sellers for almost 1,100 crore and DIIs bought for around 1,300 crore. If you look at derivatives also, Options data, new call open interest added around 12%, and very little put open interest is added. That means the PCR yesterday was much better, 1.36, very bullish, but it came down to 1.23. That's a tilt toward, though it is bullish, but tilt towards bearishness. If you look at participant positioning, also clients almost 12% bullish. That's actually increased from 8.3 yesterday. FIIs 12% bearish. So that's slight negative in, there is a increase also in bearish positioning, and prop traders are largely neutral. Okay, so these are main points that I want to discuss. So see, let me tell you, market is in the range of 24,300 and 24,000. So as long as this market is in this range, selling will be better, because what happens is you may get moves, right? But before that, you enter a trade. Let me show you one example. So you enter a trade and then you just get stuck in that range. So for example, look at this, you see a breakout and then you are entering, you get stuck here. So you have to anticipate this up move and you have to enter here. How is it possible to trade against the trend when everything is below? So then only you will be able to capture this, right? But after that, if you're entering, it is going consolidation zone, you won't get anything. Now here from 20 MA, you are looking for rejection, but it stay here for quite some time, testing your patience. And finally, by the time it is giving the move, you will be out of it. Even here itself, because of time decay, and even it will be aggressive today, the decay, you'll be out of it. So that is my point. Be very careful. You feel that you are getting the momentum, only then you enter. Don't just buy and hold it on an expiry day. I'm just telling this to the beginners. That's the mistake that you make. You will see that you may be right in the direction, but you may not get the move and you won't get the premium move. So this is what majority of the messages and the calls that I get, they used to tell me, I'm right, I'm able to predict. But then if you're an option seller, you just stay there, you'll get it. Even if it is going sideways, you'll get it. Even if it is in your favor, you will get it. Even if it goes against you, but slightly, slowly, then you will still make profit. But as a buyer, you make it only if after your entry, it has to come in your favor faster. If it is going sideways, you lose. If it is coming in your favor, but slowly, you will lose. If it is going against you, you will lose. So trade by understanding this. So see you in the next session. Thank you. If you would like to learn this in the live market, where we have the live market mentoring program, where I trade live with you and I teach you with my trades, where you can see all my trades, how I take entry, how I take stop losses, everything is open, and you'll be able to see, and you can learn from that. It's not a call providing program. Don't think that. It's a mentoring program, which I do in the live market. You can talk to my team. You can join the session. I see you.